I am the inventor of Dillon wave theory and the concept of buying a commodity below the cost of production. I have helped thousands of investors earn substantial profits over the years. If you can invest $5,400 per contract right now, this very moment, there's an investment that could double your money within the next 6 to 12 months, and it has never failed since 1999. Here's why it has never failed. Producing a commodity costs money. When a commodity trades below the cost of production, the producers will cut back on production. When the supply is cut back, the demand will exceed the available supply. When demand is greater than supply, the price of the commodity will soar. I don't think there's a smarter investment in the world available to you or to me than buying a commodity below the cost of production. There are only 1 or 2 opportunities of this kind per year, and it is worth not missing them. To capitalize on this opportunity, consider opening a futures account if you don't already have one, and explore the possibility of subscribing to the Dillon Wave Investment Report. Each of our reports is filled with important fundamental and technical information that explains why you should invest in the commodity we are suggesting. Back in 2001, I issued a report on gold. At that time, the economic cost of production for gold was $263. Meanwhile, it was trading below $260. Half of the mines were losing a substantial amount of money and were closing. Here is what happened to gold after it went below the cost of production in 2001. When gold appreciated 25% from $263 and reached $329, our customers earned 100% profit on their investment. Would gold have sold for $0? Of course not. So in this situation, your investment is safer than a stock as long as you put enough money aside to cover the possible open equity drawdown of the leverage trade. And in our report, we already calculated the amount of money you should put aside for a trade. Often a commodity will continue to go below the cost of production. That is why even if a commodity could be bought for a $1,000 margin, we recommend you have at least 5 times the required margin to maximize chances of successful outcome. We combine cost of production, fundamental information, and our technical timing tools to choose our entry prices. The entry timing tools we use are a critical component of our strategy and success. In our reports, we let you know the entry price, the leverage you should use, and the reserve capital you'll need in order to trade effectively. When there is any adjustment to the protected stop or re-entry into the market, you'll get an email from us. Most of the time, all you will have to do is enter the market one time and do nothing else. We will email you updates to the trade. Please keep in mind, this has nothing to do with inflation, interest rates, unemployment figures, Fed announcements, or anything like that. What I'm talking about is a logical, smart investment strategy that has produced a net profit 99% of the time. That is why it deserves consideration for the use of your investment capital. Here's how you can earn 50% to 100% with our current commodity report. Buy our report. Enter the trade. Put in the profit target. After earning 50% to 100% profit, your next step will be to subscribe to our next report when it's available and earn another 50% to 100% profit. I don't know of any smarter and safer way to double your money in a short period of time than buying below the cost of production along with our market timing. Wise people bet heavily when the world offers them that opportunity. They bet big when they have the odds. And rest of the time they don't. It is just that simple. Here's what Warren Buffett says. I like to put meaningful amounts of money in a few things. Here's what our customers have to say. Started with $20,000 and progressed to 2 contracts. And when my account hit $40,000, I went to 3 contracts. Now my account is at $48,000 plus. That is 143%, I believe, in just 10.5 months. I had some trouble with the drawdowns at first, but studied the materials on the website and listen to the Wednesday twice-a-month conference calls. I must say encouragement has been wonderful, and of course, Michael's trades are what used to be in my dreams. Because of my dreams are becoming reality, thank you is not enough. Michael C., Lawrence, Kansas. If our commodity reports along with our trade signals do not earn at least 50% profit within 12 months, simply ask for a full refund and we will issue it immediately. We know you won't ask for a refund because the idea is too good for you not to profit.